So, Divergence, tell me please, what do you prefer? 100K account with the funded trader, it's this one here, no? Or some cat food? Yeah, I think it's the cat food. Hello traders, and welcome to a new update video regarding the Funded Trader Challenge account. So first of all, as you probably noticed in the community page, we actually had a contest regarding who is going to manage the 100K account. And the battle was pretty strong between me and Divergence. Yeah, but actually she was on the first place for some time, and this is why I decided to be fair play and to ask her today if she wants to trade or she wants some cat food, and you saw her reaction. So yeah, with no more further ado, let's go to some serious stuff now. So first of all, in the last week I wasn't actually trading because of this. Yeah, I was basically driving the entire week and was busy with a lot of stuff regarding my sister's high school auditions. So yeah, I was actually postponed my performance and my trading in the funded trader account, but now it's time to go again to some serious stuff. And I would like first of all to show you the strategy that I actually decided to use for this account, and after that we will see some backtesting results and some really great remarks regarding these strategies. So first of all, let's make a quick recap of the setup of this strategy. We are going to use the 30 minutes time frame, and as indicators I am going to use the 200 EMA and the MACD. I already marked here the zero line of the MACD, and I will explain you why. So in order for us to have a buy entry, first of all we have to be mandatory with the price above the 200 EMA. After that, in order for us to have an actual buy signal, I'm going to replay the chart somewhere around here. So the price is above the 200 EMA, and now we have to wait for the MACD to make a cross to the upside, but to be below the zero line when this cross is happening. And actually this is the case here exactly. So we have the MACD cross here below the zero line, the price is above the 200 EMA, so we are going to open a long position at the closing of this candle. I would like to mention that you should mandatory wait for the candle's closing, because otherwise you will expose yourself to a lot of fake outs, and it's better to be late than to be wrong. So yeah, for the stop loss for this position, we are going to actually set a stop loss somewhere below the previous swing low, below our swing low, actually right here. And you will notice that this strategy will have some huge stop losses like this one, but this is not a problem, because on long term this is you will see that this is a profitable strategy. And now first of all, the first milestone that we have to achieve with this strategy is to see the reaction of the price at this level. So we are going to actually combine the entries of the indicators with some market structure and technical analysis in order to trail better the positions. And now let's wait for the price to see the reaction on this level. Alright, so now as soon as the price broke this level, I will generally move my stop loss on break even in order to have no more risk on the table. And after that we will trail our stop loss in order to catch some pips with this position here. Okay, so we can see that the price already formed some consolidation zone right here, and after that it broke to the upside, so we are going to move our stop loss somewhere below this zone already here. And actually this position would actually still be going, because it was an entry formed somewhere, I think on the Friday evening, but as I told you, my previous week was pretty busy and I missed this trade. Alright, so this is actually a buy position that would still be on. And now let's look for a sell example here in order for you to see all the examples. Alright, actually I already marked this here. First of all, let's see the conditions for a sell position. So the price should be mandatory below the 200 EMA, and as you can see here, the marked position was actually the only sell position that we would have to take in this zone, because when the price is below the 200 EMA, the MACD should be above the zero line in order to have a valid sell position. So right here I am going to replay again and see how was the reaction of the price. These marks here are not mine, are Alex's. I think these are trades on lower time frames. Alright, so right here you can see that the cross between the MACD is not actually correctly made, because you can see here the difference between the blue and the red line. So we'll have to wait for a confirmation here. And actually now the cross was made, but literally I am never taking sell positions on this kind of bullish candles, so I am preferring to wait for a confirmation candle. So after this candle here, I am actually going to open a short position, and the stop loss for this one would be somewhere above the previous high. And again, you can see here that we have some huge stop losses, but again you have to be aware of that and to accept the fact that it's not a problem. Alright, so again, the first milestone to achieve here is to wait for the price to actually break or to be rejected from this zone. We will see. Alright, so as soon as I see this pretty small but still a rejection in this zone, I would move my stop loss on break even here, because we risk for the price to just come back from this zone as it previously did here. So I prefer to stay safer, and after that we are going to wait for the price to actually make a move in this zone. For the moment it was consolidating here, but it is trying already to break this zone. Actually that was only a fake out, but yeah, maybe we will be involved into a good sell position, and we are, because as you can see here, the price already broke this zone nicely here, so we can safely move our stop loss somewhere around at 1-to-1 in this zone here, because the price already broke this zone. And after that we are going to actually trail our stop loss with the swing highs that are made by this downtrend. And now our stop loss should be somewhere around this zone. Let's go further and see how the price will react. And I can see here something that already concerns me, and this is the fact that the price started to make this descending channel here, which is a sign that the price may reverse soon from this zone. I am actually going to trail a bit more my stop loss somewhere around at 1.521 above these highs formed here. And now we are going to wait. Let's see how this candle would react with our stop loss, but we would be still in our position here. And we are still involved in that descending channel. We can trail our stop loss somewhere around at 1.821. and let's see how the price will react. But I think with this candle here we are out of this position with 1.821, and as you can see here, let's measure a little bit this position, and you will see that these positions are going a pretty long time, but yeah, this would be open 1 day and 10 hours, but you will see in my backtesting results some averages regarding the stop losses. Okay, but prior going to the backtesting results, I would like to show you here the 4 pairs that I'm actually going to trade. Regarding the risk that I'm going to use 1% risk per trade for this strategy, and the pairs traded are going to be Aussie US dollar, USD CAD, GBP US dollar, and USD JPY. And now let's go and take some conclusions regarding the backtesting results and these pairs traded. Alright, so first of all I would like to mention that this kind of backtesting really helped me to understand what to expect from this strategy. So what do we have here are the results of the USD JPY on April, March, February and January 2022, and you will see here that every single month have some different results. And first of all, you will see that total gain on account varies a lot. There are months when you will make with only one pair more than 10% in a month using 1% risk per trade, but also we have the case here of the February when trading only USD JPY would lead us to a gain on account of only 3%. But this is why I decided to actually trade 4 pairs, because they are actually balancing, and when it's a month with a break-even or only 2% gain on account with one pair, you may have some pretty greater results on other pair, and this is why I strongly recommend you to trade at least 2 or 3 pairs when trading this strategy. Also, I mark here the average stop loss because when I started to trade again this strategy, I was pretty concerned regarding these huge stop losses, but you can see here that the actual average stop loss is somewhere around 300 points on USD JPY, or sometimes only 200 points on USD JPY again. Also, regarding the average time in hours, this prepared me to the fact that I will have to pay overnight swap, and I will have trades opened overnight or over weekend, and this is pretty fine. Also, regarding the maximum losses in a row, again, it depends on the market behavior. So in the April month, we had actually a pretty trending pair on USD JPY, and this is why we actually got only 1 loss. But there were months when we've got 3 losses in a row or 2 losses in a row, and in these months we have to actually pay attention to the market behavior and to the ranges, because I am pretty sure that these 3 losses in a row were into a ranging market where we actually had to stay out, to sit on our hands and to wait for an actual trending market. So yeah, I think this is enough rambling. For the moment, I actually do not have all the results of all the strategies in order for you to see the total gain on account using all the 4 pairs, but I'm going to do that in a future video if you want so. Prior that, I am going to actually keep you updated with my account and my trades open. I will try to actually film some trades taken in the real market in order for you to see how I calculate the stop losses and how I am executing the trades in the real market. So stay tuned until the next video, because you will see how I am actually performing using this strategy on the 100K account with the funded trader. Also, if you want to check this prop firm, the Find a Trader, you will find their link into the description. You will find there that they have some pretty good conditions for trading. I really like the fact that they have this 6% daily drawdown, maximum drawdown, and 12% overall drawdown, but they also have more other great rules, and you will find all of them on their website. So yeah, I think this is it for today. Thank you all for watching. See you in our next videos, and of course, until then, trade safe and trust the process.